Hi, welcome to today's episode. In today's lessons, we are going to go through how to operate this Excel model accounting software. My name is Junkofi Nketia, and this software is user-friendly. It is basically divided into two main sections, the data entry section and the reporting section. But for now, for the reporting section, we only have the financial statement, which includes the trial balance, the financial position, financial performance, changes in equity, and the notes to the financial statement. Now, for the data entry section, we have two main sections, which is the transactional data entry and for the administrative data entry. Or settings data entry. So for the transactional data entry, we have the journal side and then the cash book side. This is to clear all confusion. So any transactions that has anything to do with cash book, you need to pass it through the cash books. And if it is any non-cash transaction, which is passing of a journal, you have to use the journal entry. Now, the rule here is that even if you are passing a journal entry and it affects the cash book, you need to go into the specific cash book. That is how it operates. And this is to make everything as simple as possible for everyone. Now, for the cash book, it is highly scalable. It is scaled to 7 banks. It is scaled to 7 banks, and you can make the entries in the chart of account. So whether setting up the business or anything, you need to start with the chart of account. And for the chart of account, we have carefully selected the main classifications, and it has gone through several reviews, and we feel like this main classifications is going to be exhaustive enough for all of operations. You can scale it to any business size or type, especially for the medium and the small term businesses. Now we have the main classifications, and like I mentioned earlier on, this one has been carefully selected to make it scalable to all operations. Now for the revenue, you can come to this side and then enter the revenue that relates to your business. And for the other income, because we want it to follow the new IFRS 18 principle, which requires that you report your operating profit, your investment profit, and your financing profit, we are going to make this 3 selections static. It is going to be a must. For investment income, finance income, and other operating income, it is going to be static, but you can add additional other incomes. But then it is going to be something like an adjustment. For instance, proceeds from asset disposal, it's not a financial performance item. You need to pass an additional adjustment to bring the profit or loss, or the gain or loss on the disposal, in the financial statement, especially in the profit or loss side. So when we come to this administrative expenses, you can see that we have the loss or gain on disposal, and we have made it static. You can't change it. Like I mentioned earlier on, this is a carefully selected main classifications, which is highly scalable. Then the list go on. You can find time and then go through it yourself, but this is to give you an overview of how it works and how, if you are developing the software, you can appreciate why we are bringing certain things. Okay, so once you are done, you enter your business name. You can add your logo as well. Then you are good to go. Then we come to the reporting side. For the reporting side, like I mentioned, it is just a standardized one, and it is highly scalable. The more you add items, it is going to appear over here, and then it is going to balance it off, unless maybe you enter the wrong transaction or you did not follow the double entry principles. Other than that, everything is going to balance correctly. So you see that for now we only have 4 banks and cash head items. That is why you see cash on hand. This one is Ghana Commercial Bank, and then the Fidelity, and then the journal over here. So we have the trial balance beginning And then once we go down, we have the financial position, and then we have the financial performance. And then we come to the statement of changes in equity. Thank you.